The government has meanwhile set a 15-day deadline for public sector banks to identify gaps and suggest a comprehensive strategy to strengthen operational and technical processes. The Banking Secretary Rajiv Kumar has put out a tweet saying senior functionaries will be held accountable for any lapses. Nikunj Ori now joins us from Delhi. That's quite a strong message out there, Nikunj.
Right. The Finance Ministry has given a 15-day deadline to public sector banks to identify gaps, technological and operational risks in the system and take preemptive action. The Financial Services Secretary, Mr. Rajiv Kumar, tweeted there would be a group of executive directors and chief technological officer who would be tasked to identify gaps in the system, make a comparative assessment of operational risk management practices of their respective banks with the best in the industry, and based on the report submitted by the group of executive directors and chief technological officer, the board of respective banks will assign accountability to senior authorities who would have to make sure that these recommendations given by the group of EDs and CTO are implemented. Over to you.
All right, Nikunj, thanks so much. So sort of trying to move and contain operational risk in these banks. It's coming a little bit too late in the case of Punjab National Bank, where the stock has corrected sharply since this fraud was disclosed. Jayesh is joining us with the story of PNB in 4 charts. Jayesh.
So here we are looking at some of the charts that we have from the Bloomberg terminal. So what I did was 4 charts depending on 4 time frames that we have. Let's start with the daily time frame. What you have on the chart is a 5-year daily movement. The red and the green line show you the candles, and the white dotted line is essentially the 200-day moving average. What you can see currently is that it's trading sharply below the 200 DMA. To give you an exact number, that's 35% lower. Let's have a look at historically how this has panned out. So in 2014, 15 and early part of 16, the stock actually traded below the 200-day moving average, and it took good more than 1.5 years to recover and climb back. The same case happened in 2013, and just before that, when you saw that the entire year of 2013 that was spent below the 200-day moving average. And currently we have just broken below, just about a few days back, this has broken below. So if history is to go by, could be a consolidation or a further downfall for more than years to come, and then we could see a climb back. Let's have a look at how the weekly chart pans out for Punjab National Bank. That's the interesting one. So this is a weekly chart starting from 2013. Let's focus on the double top pattern first. So in 2014, this point was 231.5, and the recent high was 231.6, just 10 paisa higher than what the previous top was. So the double top has been formed, and post that the stock has declined. Where could it find a bottom? Now first we analyzed where was the low of this particular trend, which started in 2016, this yellow line. So now this has been broken. This was about 130 odd level. The next yellow line was the next bottom that had been formed in 2016. That has been broken as well. The next future support that we could look for is the double bottom that was formed below 80 levels for the stock, currently at about 99.5. So that's where the double bottom forms, and that could act as a support for the stock. Moving on, for the monthly chart that we have, so I used the Fibonacci retracement tool on the Bloomberg terminal, and it shows that so what I did was only consider what the recent leg, the rally has been, starting from 2016 to the recent high. If I draw a Fibonacci retracement over there, the 61.8%, which is a key support level for the retracement, that has been broken, and the next support that comes at about 69.25. So some of the key levels that you have to watch out for. So that's about the technicals, but how do the fundamentals, or the key valuation parameter that one tracks for Punjab National Bank is the price to book. If we can have the chart on the screen, you'll see that. So the white line is the actual price to book, and the blue line is the estimated 1 year forward price to book. What it currently does is it shows that the price to book is lower than the estimate, which means that the stock is available at an expensive valuation 1 year forward. So some of the technicals and fundamentals put together for the stock of Punjab National Bank.
Yes, thank you so much for that interesting analysis. That meanwhile, Nirav Modi's international jewelry business Firestar Diamond Inc. has filed for bankruptcy in the United States. The jeweler blamed liquidity and supply chain challenges for this move. Jeanette Rodrigues from Bloomberg News now joins us. Jeanette, so this claim has nothing to do with what's going on here in India. There's been not even a reference to it.
No, Firestar was actually not named in this complaint to the CBI by Punjab National Bank. Of course, this is a company that's affiliated with Nirav Modi. According to media reports, Nirav Modi had written to Punjab National Bank saying Firestar could be one source of funds which would help repay the money to PNB. Of course, that's now not even something being discussed. So Firestar, while it's not directly implicated in this scam, we do have to consider it as a source of funds for the group, and definitely creditors should be concerned. Another question we need to ask is, do the same banks that have exposure to the PNB fraud, do they also have exposure to Firestar? That's a question that we still have to delve into. We have asked the banks that question, and none of them have come back to us and given us clarity on that yet. How much debt is this company claiming in its Chapter 11? Firestar says that it has assets worth up to $100 million, but it also has debt of equivalent amounts. It says roughly 50 to 99 creditors are exposed to this company. So these are the financials which they have disclosed, but the names are uncertain, the precise amounts are uncertain.
All right, Jeanette, thanks so much. That's Firestar, and that's one of the promoter companies of the Nirav Modi group. But the impact of this entire story is playing out on the broader gems and jewelry industry as well. And Swansea is joining us to give us a sense of what some of these jewelry companies are facing. Remember, this is not the first time that this sector has found itself in trouble. Although in previous cases, it was credit risk. This time, it's a different kind of risk that has played out.
Right. I mean, jewelers are fearing that this fallout of this Nirav Modi case, plus in the past we had Vincent Diamonds also defaulting. So these kind of things will further tighten credit to the sector, and these fears kind of are seeming to be true, because in the past 2 weeks our sources are saying that banks are kind of being very serious and they are checking jewelers' accounts again and asking for ensuring that they only give loan to genuine exporters and not round trippers. And at the same time, increase scrutiny and documentation. And we have anecdotal evidence of that. They are questioning even in charges of
where there's increased scrutiny.
Yes, scrutiny. Yeah, they are questioning charges for even 180 rupees, which is a very small. Yeah. Are financing options drying up for these guys? Yes, they are in a way. We haven't yet heard from on the ground people saying, but from the banking sources we are saying that they are being very strict about who they lend to. So that would mean they will have lesser credit, and that would kind of impact exporters, because their productions will fall, and that could ultimately impact jobs. That is what the industry is fearing.
Okay. Swansea, thank you for joining us with those details. Let's get in an industry perspective now. Colin Shah, Vice Chairman at Gems and Jewelry Export Promotion Council, now joins us on the phone line. Mr. Colin, thank you so much indeed for joining us. My colleague was just referring to how there is a certain sense of nervousness in the industry. Funding options are drying up, banks are increasing scrutiny. What's going on?
Banks are increasing their scrutiny. That's happening for sure. It's a pity this has happened. GJPC is 50 years old. We have 6,000 members. In those 6,000 members, 2,500 are exporters. And while this incident has happened, these are 2 out of 2,500. So we really hope this is not a reflection on the industry at large. But I'm sure in the short term, bankers are going to scrutinize, everyone with a magnifying glass. So SMEs continue to struggle for finance, and this incident has happened. But to be honest with you, this incident is also a large lapse on the part of, this particular bank, Punjab National Bank, and this is in no way a reflection on the industry at large. This is 2 particular players, 1 bank, a scam in that sense has happened, but it's not the industry at large.
Mr. Shah, in particular, are financiers becoming are not doing LOU-based financing anymore? Are they looking at direct credit lines instead? Can you give us a sense of that instrument? Because I believe it was quite prevalent and widely used in the jewelry industry.
No, this actually is a misnomer, and let me be the first one to correct you. diamond imports has been happening in this country for nearly 50 years. And as you know, 14 out of 15 diamonds are cut and polished in India. LOU is actually not used as an instrument at all by the industry. This is a super rare instance of two companies doing this with Punjab National Bank. So even if the LOU instrument is, say, discontinued, it will have no impact on the industry because nobody was using it, and we as GJPC have not only, been in touch with the government about this, we've been in touch with the bankers also. So it's a little mind-boggling even for us as to why this instrument was used in the first place in this particular case.
Okay.
So it's not used prevalently. I mean, let me clarify this very clearly.
But sir, I mean, in the initial phases, this was an instrument used widely by capital goods companies, and then I think regulations were changed, etc. And then
the diamond bank merchants never use this, So
are you sure that's true, sir?
Yeah, I'm absolutely sure.
Okay.
Okay. While I understand, Mr. Shah, that this is not an industry-wide issue, we've seen the Winsome case and now the Nirav Modi case. What's the mood in the industry, and is there conversations on self-regulation? Give us a sense of what's going on.
See, the mood in the industry is grim. Since 50 years. Okay, this is probably like say the darkest week, I would say, if I can say so, in the industry's history, where even if you walk on the roads or anywhere and you say you're a jeweler, they're looking at you as if you're some kind of thief who has cheated the country, which is absolutely not the truth. It's these two people who have done this. I wouldn't say it's the industry at large. I can only assure everyone that it's a very ethical industry. On the contrary, like just to give you broad level numbers, our exports are 1 lakh crores. The total debt of the industry is 40,000-50,000 crores, at last count. And out of that, you have this huge number. So if you look at, say, the remaining 2,500 of us, we don't use that kind of finance in proportion to our exports. So, it's actually contrarian, but now this incident has happened, and I guess, our generation will have to bear the brunt of it.
Mr. Shah, I guess the impact immediately will fall more on the SMEs, as you were mentioning. The larger guys probably have some cash sustainability, probably have other means that they can use. Is there any hand-holding that can be done for the SME sector? I mean, I'm not sure who will do it because the government and the RBI will probably not be in a position or willing to make concessions for the industry at this stage.
Hand-holding will happen, but we as Gem and Jewelry Export Promotion Council, we are making our best efforts to meet bankers, meet the, concerned officials in the government, do our best to, calm everyone's nerves that let's look at the business. It's fundamentally strong. It still makes profits. They repay their debts back, and good promoters should continue to get money.
Okay.
So that's all that we can do, I guess, at this point. I think time is a healer. So.
Okay. Mr. Shah, there's another issue that has cropped up, which is getting attention, although no explanation. I think the Economic Times has reported this, and since then, chatter around it has been fairly loud. The fact that imports of cut or polished diamonds in the current financial year have surged almost fourfold. Can you help us understand why that would have happened, sir?
Yeah, so I can, I can very clearly say over here that this is very incorrect reporting, to say the least. The import figures actually are down 15% compared to last year. At exact count, we are $1.5 billion. So it's actually a decline of 15% compared to the same period, April to November last year. What it shows is, and why there was a discrepancy in the number, is goods which go on consignment. Where we all do exhibitions globally. And when we send goods on consignment abroad, and then they come back, in a period of between 1 month to 3 months. So those particular imports which came back last year have had an impact on the number, but it is not to the extent which has been reported. Imports of cut and polished diamonds are actually down 15%. So even we,
Sir, and I assume that these trade kind of shows happen regularly. Or is there a reason that last year would have been more than this year? And this is official data.
No, but I can, give you government data actually on this. This was an error. I think it's just, I guess the entire frenzy of the last 2 weeks and, all kinds of things being reported on the industry. I mean, this data imports are actually 15% down, which I'm happy to, share with you.
Okay.
It's government import data, so it's not like, data made by us or anything of that sort.
Okay. What's been the near-term impact both on demand and volumes, export volumes, I mean, in the last couple of weeks?
In the last couple of weeks, there's been no impact on demand. Actually, markets are healthier, and that's why this has come as a bit of a shock to all of us in the industry. Markets have been healthier in 2018 than 17. Our major consumer markets are, as you know, it's the US and then China, followed by Europe, Japan, and the Gulf region. And most of the large economies in the world are actually, doing phenomenally well. So in US, you have the Dow at all-time high, you have an unemployment at all-time low. With the tax cuts over there, the mood is good. So actually, for the diamonds and jewelry industry, the jewelry industry at large, 2018 will be a nice growth year. So this is just a blip, I would say, on the macro level business scenario. I mean, obviously, sentiment in India is very low, and I guess, but I don't see this as having an impact on the demands for gems and jewelry.
All right, Mr. Shah, we'll leave it there. That's the industry perspective on this whole story playing out, the impact on the gems and jewelry sector. Mr. Shah believes it's largely a sentiment impact.